Hello, everybody. Welcome to the latest CTO Craft Bytes. And so today we're going to be discussing the world of regulations applicable to FinTech and online banking organizations and what you need as a CTO to keep in mind. We'll be looking at UK regulations primarily, but it'll be relevant to FinTech organizations anywhere in the world in terms of best practices. If this is your first time at CTO Craft, let me tell you a bit more about this group. CTO Craft is a mentoring and coaching community for technology leaders around the world, focusing on supporting technologists in their leadership growth. Community numbers are over 1,500 and provides one-to-one coaching, mentoring groups, an online community, and events like this one. And a massive, massive thanks to our headline partner, AWS, for helping make these Bytes events possible. Just to introduce myself, I'm Andy Skipper. I'm the founder of CTO Craft and the chief coach. Joining us today, we have Aubrey Stearn, who's an experienced FinTech CTO and a DevOps specialist, previously with Oakam and Nationwide Business Society. Hello, Aubrey.
Hi.
Okay, so we're going to save a bit of time at the end of the session to answer some questions from you. If you do have anything you'd like to ask, please use the Ask a Question link at the bottom. That way they'll pop up and we'll be able to run through them one by one at the end. So let's go. Let's talk about compliance. So Aubrey, let's start right at the beginning. What are the most immediate regulations and requirements that should be forefront for a FinTech CTO joining or starting a FinTech business?
So this is, I think, inherently very broad, but if you're operating in the UK, you're going to need to be like an FCA licensed firm. And there are scales of this. So depending on basically like proportionality of a firm, you'll need like authorized persons, and they'll need to go for like fit and proper tests in terms of like things like honesty and their financial conduct and that sort of thing. And they fall into different groups of like straightforward applications, moderately complex, and complex applications. And so it's figuring out in terms of what services you're offering, where you fit and what kind of control functions need to be in place. So the right place to look for that is the SUP, so the supervision manual, which you can find with the FCA. That's the first place that I would go and look to see and figure out what functions need to be in place. And then it gets like quite interesting. So there are lots of high-level standards that you probably need to follow. So PRIN, which is the Principles for Business, SYSC, which is Senior Management Arrangements, Systems and Controls. There's the Code of Conduct from the FCA. There's General Provisions, or GN. And then you start to move into like specialized source books. So you have prudential source books and specialized source books. So if you were going to build, for example, like a consumer credit lending journey, then it would be the CONC that you're subject to, and probably the 1974 Consumer Credit Act. And then if you were investment funds, it would be FUND, and for credit unions, CRED. So there's lots of very specialist source books, depending on the type of products that you're offering, that will be applicable to you. And there's also like little bits in there. So if you, for example, like doing peer-to-peer lending, both the MCOB, the mortgages source book, and CONC also contain very specific directives around how peer-to-peer lending is slightly different, and some of the regulations around that.
Where do you find these books? Are they all on the FCA website? Was there?
They are. I mean, it's quite, when you look at them, and I talk a lot about like things being consumable. And when you work in these big organizations, if you ever engage with like second line risk, what comes to you is almost always like a Word document or an Excel spreadsheet or something on SharePoint. And it's not a massively consumable format. And if you look at the source books, they're also not super consumable. Like they're very legalese. They're very much like linked from passage to passage. They're very difficult to consume, in my opinion. I think they're built for a different generation of person. And I would say like for engineers, like as an engineer, like these are not super consumable for me. And I think there's probably a lot that we could do to make them more accessible and consumable and codifiable, which is kind of like the goal, the holy grail of, I guess, where most of us are trying to be.
Right. So they're not laid out like similarly to the PCI DSS kind of self-assessment questions.
They're quite tiered and very difficult to traverse, and they often like jump down and jump around and have references to each other. So they're quite difficult to traverse.
Right. Is it? I'm assuming there are like consultancies and support you can get if you do want to get some insight on how to actually comply with these source books.
Absolutely. Like there's a ton of firms that specialize in either some of these or all of these. Like you can go to the Big Four, and they're absolutely like this is one of their like bread and butter things that they go and work with. There's also like if you are a startup, you may not want to go and build all of this stuff, and you may not have the resource to go and implement all this stuff yourself. And I think there are people that will build white label journeys or have built white label platforms that contain an awful lot of these rules that you can turn on and off and trigger, and we'll go and work this stuff out for you. So there's a lot of scale to this as to like how much you want to know. But I would say that it's important, if you are like in a CTO position or any sort of senior leadership position, that you do understand at least some of this. And ideally, you should be sort of reaching for like as much as you can humanly take in.
Mm. How much of what is in these source books is actual regulation, so you actually have to legally comply? How much is sort of best practice?
I think it's mostly all stuff that you have to comply with, but there are scales in it. So in a lot of these, like some of it's down to like the amount of client assets that you hold, and the Capital Requirements Directive like influences like proportionality, and you fall into different tiers based on that, and then different amounts of rules apply to you. Whereas like there are those simple cases that I talked about, and there are more complex applications. Obviously, as a startup, like if you have one person reporting to you and you're in credit risk, like you may not need the kind of control functions that they talk about when you're a much larger CMA 9 style bank, and you have like much bigger functions with lots of people underneath you, and then the point of a material risk taker becomes like a lot more pertinent.
Gotcha. Yeah. Okay, it sounds like a steep learning curve if you're new to fintech and startups in that area.
Yeah, I think it's a cool opportunity. I think there's like a ton of opportunity. I think white space for innovation, and I think I would love to see personally like more technologists getting involved in that space, that RegTech space, and understanding some of those obligations. I think there's a huge opportunity to innovate there, and I just don't think there's an awful lot of us that understand enough of it to say, I think there's something smart we can do there.
Mm. Are there any good startups working in that space, just kind of untangling it?
Quite a few. I think RegTech is a blossoming space. I think everybody's looking for like smart solutions, and there are solutions for startups, and there are, if you talk to like the bigger organizations, I touched on the topic in one of my videos that some organizations have actually attempted, and it's just there are different scales of requirements. There's some probably are only really achievable by a bigger organization with the weight and might of their engineering teams, whereas other things like off-the-shelf solutions are probably going to be easier to sell because there's more demand for it, for people coming in and starting FCA licensed firms.
Right. Yeah. Cool. Well, so tell us about systems of record. I know this is a subject that features quite heavily in some of the compliance. What constraints are there, and how do you plan for building a system of record that's compliant?
This is a very interesting topic, and like it's one that there's lots of like canon, and it's very hard to figure out exactly where it came from because it predates my time in the industry for sure. But I'd say like once upon a time, we would talk about banks having mainframes, right? And some of them still do. But this is your Unisys and Mitsubishi, Hitachi's, IBM mainframes. That's kind of like tier one. And then you have your services that go on top. So SAP, Oracle Financial Services are probably like some of the newer solutions in that space. And then you have your very, very, very new services like Foundry from 11FS and 10x banking services, where they've all tried to modernize and componentize like all of the things that you might need in a banking organization that will plug in. But ultimately, your system of record is your like authoritative source for data elements in a system that contain multiple sources of the same element. So it's like your most accurate and timely view of the data, like your source of truth. And when the first rung of challenger banks got their licenses way back when, you can imagine that they're starting these new banks and they're offering these like single products and they're regulated for it. They don't have customers. So that they don't have a system of record anywhere. So there's like some quite interesting things to go and find out. Like, can you have a system of record on the cloud, and like how comfortable are folks going to be with that? Because like these folks are not going to be able to go and afford putting in a big old IBM Z series mainframe system and go and find the people to go and write for it. And do they have those kinds of requirements? And it's quite interesting. Whereas like these bigger organizations obviously have this system of record and they're very integrated into it. And it provides a lot of stability and concurrency. And they are aging and they're looking for solutions to go forward, but probably not at the pace that these startups are moving. And so I think the regulators, as far as I understand it, were very, very nervous about the location of system of record. It's just one of those things that has become canon, that it's on-prem, it's in a data center, it's highly resilient, highly durable. It's one of those things that is a cornerstone of an organization. And I think there's been, again, like healthy challenge of that, and seeing folks like 11FS and 10X in the market being able to build these new cloud first platforms that work in a much smarter way has provided like enough sort of evidence that it's viable to go and run the stuff in the cloud. I mean, even if you were running like a Unisys mainframe, I know that Nationwide had moved from a Unisys to a SAP system, but Unisys, for some time were working on moving away from their hardware to creating like an x86 abstraction layer that means that you could run their services on the cloud and find a way to get to the cloud. So it's quite an interesting sort of challenge. And then there are obviously like layers and scales to this. So, you're obviously not going to be hitting your system of record directly, because that would be insanely manic. And so there are obviously like several caching layers, and most organizations have like clearing times for things and scheduled runs that will go and like reconcile against those system of records. So it can be quite complex. And I think this is where the need for like strong architecture comes in. I'm not predominantly like a big fan of architecture, but I think for things like this, it makes like a ton of sense to have people that really do understand these systems. And when they do, face challenges, it is very useful having people on standby that understand them like to an extreme level.
Yeah, sure. So, okay, so it's much more a kind of data warehouse with a whole bunch of resilience and a whole bunch of redundancy and so on. No, it's not an operational database. It's something just there to hold a permanent record. Absolutely,
like ledger systems. Yeah, they work in a very specific way, I guess. Back in the day, these mainframes were offering things that you probably wouldn't find in your common system. So like we take trying to remember the like Spectre, like the CPU exploit that came out. Well, that was like superscalar instruction execution, so out of order instructions. So when a CPU executes its instruction set, there are like lots of cycles often left over. And so the CPU has like this ability to predict what is the most likely next instruction to be executed, and it will execute it out of order speculatively to figure out, like, just in case that is the next thing, like I've already done it, right? And that's how they kind of speed up execution. And that wasn't in modern CPUs for a long time because it was quite hard to implement. And so you would only find these kind of superscalar instruction processing in older CPUs in these are really expensive mainframes, and that's some of the features that they used to go and offer. Massive parallel processing and like things that now are in our modern CPUs that never used to be.
Mm. What are the constraints around where you can actually hold the system of record?
I struggled with actually trying to find like the actual restriction on this, and I think it feels almost like an unwritten rule as to like where you can place it. I don't think there's anything from a regulatory perspective that says you can't. I think what you find is that when you work through functions that are critical and important, or critical and important, and then you have elements of like concentrated risk, I think that's like in tandem, all of these things sort of say like yay or nay that you can go and do a particular thing. And cloud was one of those things that was on the radar for being outsourcing, like, and then it starts to say, well, this is a huge amount of outsourcing, and it's critical and important because you're putting all of your important functions on there, and it materially can change the position of your organization. We as a regulator are uncomfortable with that, and I think recently the EBA has shored up their guidelines on what that outsourcing agreement actually looks like, and what they're comfortable with, and what you need to know in terms of like consuming outsourced services from cloud, because it's all about being competitive. Like they recognize, the EBA and the FCA recognize that we want to stay competitive, and the way to do that is to be able to consume services provided by other folks, so we don't have to build them ourselves, but they still have to worry about the fact that if a service provider implodes, then everybody's kind of in trouble after that.
Are there geographic constraints? So if you're building a bank for the UK, if the hosting provider is split across multiple territories, is that an issue?
Yeah, it's always a big deal. I know that the Shield directive was ruled to be, not. I can't remember the details of it now, but the export license between the EU and US was ruled to be invalid, and we have obviously the Ireland UK issue with Brexit as well, and so like where we place our data is quite pertinent. And there's also like a ton of rules around bigger firms but operating in local jurisdictions. So this is part that I'm definitely not super well versed on, but there is a lot of wording in the FCA around being a more global firm but operating in the UK, and how the UK part of that has to operate. And just having been in some conversations with like bigger global firms recently, it's quite interesting because the folks from the other side of the pond don't always understand our regulation, and so it's quite interesting when they're looking for folks that do understand the regulation in the local jurisdiction. And I remember how important that was when I was trying to run a startup, trying to figure out in local jurisdictions like what were the rules that were applicable to me. And you can imagine like what a massive challenge that is, trying to figure out in another country like how you can operate. And a really interesting example is I think the New York taxi rank and the medallion system, in terms of like I think you have to be issued a medallion to be able to operate a taxi, but if you're operating a taxi, that you have to use a particular payment provider in New York. And I think that might also apply to Uber as well. And so it's quite interesting because the unions control which payment provider they pick. And I was kind of astounded like many years ago. I don't know if it's changed, but when I read about this stuff, and I was like, oh, that's really different from the way it works here. But yeah, the local jurisdictions are quite interesting.
Yeah, very much so. Cool. Something else that I've seen pop up in conversations about compliance and regulation is about requirements. Both storing those requirements, but also having some kind of traceability around them. Is that something that's important in the startup context, or is it just something that's relevant to larger organizations?
Absolutely. I think no matter what size of organization you are, especially if you are regulated and licensed, then there needs to be a level of traceability from to be able to explain like why you've done something or why you spent time on something, or particularly like if you're infringing on a regulation and the FCA come knocking and say, hey, we've had reports of X, Y, and Z. Like really, it's about like what have you done? Like were you trying to address this, or have you made inroads to it? I think where from a larger perspective and from like a regulated perspective, if you're for example like a material risk taker in a big bank, being able to understand what has been implemented is quite important. So if you take, for example, the consumer credit source book, the CONC, and you were to go and offer a consumer lending journey, if you are the material risk taker for that business unit, you're basically where the buck stops, and you're the person that's saying like, yes, we have adhered to everything that is relevant to us in this source book. And that's a really big deal, because what's on the line is your bonus. So a material risk taker is somebody that can proportionally or influence the material risk position of a firm. So they are incentivized to create stability in the way they do that. And again, this depends on like your asset ratios and how much like client assets you play with and what proportionality you fall into. But if you are a big tier one firm, then you could be paid up to 60% or 40% of your bonus in linked instruments, and it could be deferred up to 8 years. And that will happen year on year with your bonus. and then that bonus and that salary is also subject to malice and clawbacks as well. So like when somebody breaks the rules or things don't go right or the performance isn't where it should be, like ultimately you're the person that's going to suffer for that. So you can sort of understand like the importance of being able to say like, where are we with these requirements? Like how much of this stuff have we actually implemented? Like what's my visibility of it? And like quite often the only way that they can really go and get that assurance that they're seeking is from second line or a third line internal audit or a fourth line external audit. So it's very important from that perspective to have a traceability and to understand like how things are being implemented to systems. I don't think anybody ever says like, you have to air gap a system. Like there is no requirement that says like you have to have air gap systems, but it's really that there are requirements that say that you need to understand like what's going into production and like who signed that off. And so that's where those requirements come from. But quite often they can become canon in an organization. They can become sort of legend. And I came across some of these myself, and one of them was deep packet inspection. And it was something that we must have. And obviously, if you're of the school of thought from like zero trust networks and you're into end-to-end encryption, if you were to introduce deep packet inspection, you're inherently like sort of introducing a fault into the network where that can be exploited. And so it's important to have that traceability so you can go back to say, is this still right? Is this still relevant? Can I provide some healthy challenge around maybe this, there are better ways to do this now? And if we don't have that traceability, it's very hard to get back to like why something was introduced.
Mm-hmm. Are there standard tools and practices for storing those requirements?
So from a software development perspective, most people are used to using Jira.
I see. Right.
Yep. So things like that. From a requirements perspective, not so much. Like I said, it's very common to get this stuff in a spreadsheet or put in a SharePoint somewhere, or even PowerPoints. I've seen them come in PowerPoints before, which is just, again, just completely unconsumable and very untraceable. But often this is what this stuff comes in. And there should be a better form of capturing this stuff. And I think some of it might be just, I don't know, I guess ability to think outside the box a little bit in terms of these requirements and how we should put them together. But yeah, I mean, there isn't a standardized view, and there's also like obviously a ton that we can talk about in a bit in terms of like how we can bake that sort of traceability into code, which I think is a much smarter way of doing it, because then what you're starting to do is push out. So you're starting to go from code all the way back to the organization and push that way, as opposed to the organization pushing into code, which is, it's the wrong artifacts getting translated, and that's kind of where you lose the link. Whereas if we were codifying these things and pushing outwards, you would almost be pushing your documentation from your code and your source. So it's hard to lose them.
Right. Mm. Yeah, I suppose I hadn't pieced together that Jira in itself, just as a means of tracking the work that's going through the development teams, is a requirements log of sorts. You spoke a little bit about the need to audit those logs at some point, so you can question, I guess, what's become canon, what's become kind of built into the culture rather than an actual compliance need. And is that common practice that you'll look at those requirements logs at some point in the journey?
Yeah, so I mean, there are mechanisms for this. So if you look at like the 3 lines of risk defense model, one being like operational risk, so the people that are actually doing it. So as engineers, if we're building something, we would be operational risk. And then second line, which is, I guess, where they sort of address and implement risks and suggest new things. So we would say, like, I think I've identified something that could happen that's not great, and then we would give that to second line. The second line would probably look to go and bake that into a framework or implement that into a control somewhere. And then you have third line, which is usually like your internal assurance. And like what's depending on the scale of your organization, it's usually very unlikely that you're going to have like a third line that has technology and cloud capability. So then you go to fourth line, which is one of the big 4, or external auditor, and they will come in and go and look at your stuff, and ultimately like those people report to the board and the material risk takers. So they're kind of skipping second line to an extent and just providing that external assurance that something's where it needs to be. But that mechanism is meant to work like, we see something that has become potentially a risk in the real world. and then we should go and talk to second line and say, hey, like there's a thing here that maybe like doesn't make sense. And also, like, if we identify things that no longer make sense in the world that we're operating in, they should be ready to receive that feedback and also make those changes to the framework and incorporate them. So that there is a mechanism, but there's probably like a lot of lateral movement in terms of like how effective that relationship is and how many people understand their part in that relationship, and how, you know, if that relationship actually gets executed at all. In my opinion, I think there's quite often a communication challenge there, and I would love to see a little more innovation around or easier ways to be able to say, like, hey, you know, I'd like to open a request for comments on this new risk which we think is coming in. You know, somebody said the EBA is introducing like a new directive which will ultimately turn into a regulation, which will ultimately turn into something. We think it might look like this, and that goes down to second line risk, and they push out and say, like, hey, engineering, what do you think about this? Like, just to give you a heads up, like, do you know, is this control sounding like right to go and mitigate? And then just like, that's not readily available. Like, and those mechanisms aren't finely tuned. I'm sure there's a lot that we can do there.
Interesting. Okay, yeah. And speaking about control, something that comes up quite often is control frameworks or control matrices. Can you tell us a little bit about what those are, and some examples of why you might use those, and where you would acquire one of those? Absolutely,
yeah. I mean, I think a lot of people are probably used to getting like NFRs or like non-functional requirements in big old spreadsheets, and I always visualize it as very much the same thing. But your control framework, like, controls exist to mitigate a risk, and a really nice way of thinking about it is that there is a risk, and then we have a control, and the control is very much like EBA directive level kind of thing. So it's not telling you how to mitigate it, it's just saying that these are things that we should do to mitigate this risk, but it's really not finely grained. And then you have a guardrail, and your guardrail is your implementation of something to go and meet that control. And examples are like free frameworks. So the Cloud Security Alliance Cloud Controls Matrix, they have a framework out there, and it's I think like 50, 60 rules long. What it doesn't contain is the risk, and that's the one thing I don't like about this, is that it kind of just gives you the control. And what I really want, again, is that traceability back to the original risk. Like, what is the risk? Because I think if you said to an engineer, by default, we have to go and like encrypt all this data, and you just told them that's something that had to happen, I think it would make a lot more sense if we said, we have to go encrypt this data because, you know, it could potentially leak to the outside world, and it will cause reputational damage, but also like we would get fined by the ICO. And here are the fines in terms of like monetary value that our competitors have got fined in the last year. That's a more interesting proposition to an engineer. I think they would recognize the value of that work. But an example of this framework might be something like there is a risk that we could suffer data loss and reputational damage and receive this fine from the ICO. And so the control might say all customer data will be encrypted at rest in transit, and essentially you can't place customer data in like these locations. And then your guardrail might be something like here is a Terraform module that lets you provision a Dynamo database, and by default we've said that encryption is on and has to be on, and all databases are provisioned by using this module. And like, here is a AWS config rule that says that no databases can be encrypted, can be provisioned without A, encryption on, B, a customer master key, and C, by using the encryption service, KMS. So that's kind of like how that chain should look, and it's almost like a bridge if you look at it. So, you know, if you're an engineer or somebody in risk or someone over here at a material risk taker or a senior management function on a level, you can have a conversation like across that bridge at sort of any level, which is, I think, quite, again, like back to the communication point along all these people that are involved. Like, communication is always the problem, and I think, you know, you're creating a nice lateral language for communication there.
How common is it to buy those in rather than create something internally?
Again, there are free offerings. The big four have their own offerings, and they have incorporated like a ton more rules. The sizes vary, so I've seen frameworks from like 120 rules I've heard of frameworks that are 800 rules large. I've heard those folks are still stuck in development after 3 or 4 years of trying to incorporate them. And it's challenging because there's an awful lot of them. My thoughts were around like breaking them up into smaller frameworks that were, something you can implement on your own, and then you can sort of take out and replace and extend and grow and reduce with a bit more fluidity. So I'd say it's quite common to buy them in. I think with most organizations, they're always looking at what everybody else is doing. And I think this is where external service providers who've worked with many of these organizations often come in and say, well, we've worked with these folks, and we have all this experience, and you can kind of just buy this thing. And that means you're all roughly doing the same thing. So your exposure is kind of the same, which is okay to an extent. But again, like I've seen some not great things come in those frameworks. And so I think there still needs to be an amount of healthy challenge to whether things are relevant and whether they need to be there. And it's probably important to say that it's not just technology. So you will find like legal rules in there. You'll find procurement rules. You'll find rules on like logging outside of technology. You'll find rules on like vetting contractors, and if you're outsourcing work to contractors, making sure that they've gone through like security vetting processes. So you'll find quite a breadth of things in these frameworks that are just outside the technology scope as well. Some things I think are quite interesting because normally we wouldn't be able to do much with them, but there are solutions to go, and things like where we have to go and check things every 6 months. Like there are some interesting solutions to scheduling that with technology. And then some things we just won't be able to do much with at all. But it's always good to understand, because these are kind of the boundaries that you're working within. And you're kind of hoping that when you start an initiative in an organization or a firm, that these are ready baked and ready to go, and you can kind of come in and be like, right, this is what I need to follow. These are the rules of the game that I'm playing, and this is what I need to do. And if they're not ready, I think that's where we have like troubles and struggles, where we try and reverse engineer what those things are, or have to go and search through the organization and try and find the access and the people that know the kind of governance that you should be following.
Mm-hmm. How much of an overlap is there between what's in a typical control framework and what would be in a regulatory document downloaded from the FCA, for example?
So there's definitely going to be some overlap. It's not just a regulatory sort of framework, though. There'll be elements of what's in the source books, and there will be elements of things that the organization has built to protect themselves. I think you have to look at these organizations, these controls and these frameworks are built as protection for themselves, and they've been built over a long time. And almost everything in those frameworks will have come from a risk that existed at some time. And so they will be incorporated. And I think there's always hesitance in removing these things, but there has to be some challenge. It's definitely like an evolving space, and I think more folks are starting to adopt it, and I love it because I think it's far more consumable than I think historically we have received things from like second line risk, but it's definitely an evolving space.
Mm-hmm. Are there any common problems with using purchased control frameworks if you're in a startup, for example?
I think understanding them, so like consumption of them. Again, when you're looking at the control level directive, it's sometimes not always obvious what it means. Like it's purposely, I don't want to say ambiguous, but it's purposely not specific in a way that tells you how to go and do this. So it will tell you that you might need to encrypt something, but it won't tell you about how you need to encrypt it, or where you need to encrypt it, or like where the keys need to be stored for that, and that sort of thing. So sometimes a lot of it is open to interpretation, and I think that is, purposeful. Like in the same way that when you look at a directive, like that they are sometimes open to interpretation, and directives are, when an EBA passes a directive, obviously it has to be enshrined in local law, and that becomes regulation, and that is then enforced by the FCA and the PRA. So it's not to the metal, and it gives you room and latitude for flexibility. But I think with that comes your ability to do a good job with it. Can you do a good job? Have you understood that properly. And I know how long I've spent in rooms reading through controls with big groups of people, trying to be absolutely certain that we've understood, the purpose of that control and what we were trying to get from it. That wasn't the easiest thing. And I know days I've spent in rooms just trying to form a group understanding of exactly what that means and exactly what it means in regards to our systems. And that's probably another thing that, depending on what you're building, those guardrails will end up looking very, very different from somebody else's initiative. If you're building a digital platform versus a journey, your guardrails might look very, very different. And so, there isn't always a shared understanding around what that control means. And I think that's probably what's important, like create shared understanding for everybody, and then your sort of micro understanding.
Makes sense. Okay. So you recently recorded a brilliant video on DevSecOps in FinTech. Can you tell us a little bit about that and what your findings were? Yeah,
you're too kind. So it's a topic that I wanted to talk about for a really long time, but when I built the digital platform at Nationwide, it took some time to figure out exactly what we were building, like what it was that they needed. And I think the more we worked on it, the more our understanding was that when you're building a digital platform, things can become brittle, like anything, because it's infrastructure and foundational. Quite often it becomes like a pet by accident, and then it's very brittle and hard to change. And so one of the things that we did was to focus on the idea of provisioning quickly, and that we would have a single repository that represented the current version of platform, and that the idea was to provision very quickly, and that would act as a cornerstone of what the platform vision was. And the other part was to create a test framework that would assert that what was baked into that first repository was true or false. So, for example, we would have the open policy agent, and we would have a policy that says you can't load a Docker container from a public repository, only these restricted repositories, which means we would bake a test with a manifest that loaded a Docker container from Docker Hub into that framework, and we would run it. And that was a way of saying, there is policy and there is a test that asserts that policy actually works. And those two things formed the cornerstone. But I always felt like there was more that we could do, and I had missed a trick. And so when I left, I had come up with this smart idea, I thought, where we could essentially take blocks of code, because I kind of understanding what was required for external audit. I knew what folks were looking for at this point. And I thought, well, we can take these blocks of code and we can relate them back to the control themselves. So these actually, all of these are guardrails in themselves, but they all relate and roll up back to this individual control. So by creating a comment with a particular tag that I could regex out, you can use what's called an abstract syntax tree to walk and roll through that code and find the preceding and postceding comments. And so if you found the comment that is tagged with the right tag that said basically that this is an audit tag and this is the control, you could then go and pull out those blocks of code and say, well, here are all of our guardrails that meet this control. And so what I wanted to talk about were, there were two parts of that video: setting up people's understanding of material risk takers and drivers. So I've seen a lot of technology companies and partner companies join organizations in financial services, and they come in with this idea of going really fast, and it's a technology problem, and trying to find, call it their steel thread, their traceability that provides an example of how fast they can go. And quite often they forget a few things. So they forget the difference between getting something live and getting something live with actual people using it, and then getting something live with actual people using it at scale, right? And that might shift the balance into something that is then critical and important, that could materially change the position of the organization. And there are different rules applied to that. And so I don't think there's a lot of folks that really understand this shift. And I don't think there's a lot of folks that understand what they should be selling. So quite often they come in and they sell technology. You're using a Unisys mainframe, you're using all this old stuff, and it's ancient, and that's why you can't go fast. And really what you have is this concept of material risk takers who have massive bonuses that are deferred, and they're financially handcuffed to the organization, and they're subject to clawbacks and malice, so they can go and lose all that bonus if you go and screw up. So they're not massively incentivized to say, yeah, you go fail fast and learn from your failings. Like that they're not in your corner for that one. But what they would be open to, rather than saying all the cool kids are over here doing this, and you should be on board with that or look like a dinosaur, you could go back and say, I can offer you a far greater level of assurance than you currently have. And that daily visibility as to how much of this control framework that we've consumed, and you can feel far more confident that where we need to be to protect you from all this malice and clawback on your bonus. And for a material risk taker, that's a no-brainer, right? Rather than having to go to second line and say, hey, can you go and audit these guys? Or third or fourth line, can you spend $500,000 on an external audit? Instead, these people can give you a rolling daily view of their continuous compliance towards their frameworks, their ability to say they are actually doing something and prove it, and provide this massive level of enhanced insurance. It's a no-brainer sell. But to do all that and to understand the drivers and levers at play, you need to understand the regulations. And I think this is where we kind of fall flat as technologists. We don't know enough about this stuff to be able to go in and start saying there's white space, there's game-changing things that we can go and do here. These are the things that you're looking for.
Cool. Are you planning any follow-up videos?
I am. So I have this is a jib. So I've got like a lot of camera gear all over the place. And I think with all my videos, you can probably see that I've tried to increase the production quality of each one. And we have one video that's probably about a week away from coming out, which has a lot more animation. It has 3 camera setup. It's really over the top. And because they're all quite long form videos, I'm going to try and create some smaller content stuff. So there are little pieces of technology that I would really love to talk about. So things like X-ray on AWS, like I'm a huge fan of X-ray. I don't see it being used enough. I think it's very, very smart because when you look at open telemetry and open traceability, it's good to an extent if you control the systems that you're working on. But if you're working in the cloud, you lose visibility on the internal systems. And what's really great about X-ray is that you can go and dive into that and you can see how long the round trips take inside their technologies on what they did. And you can just probe into all the AWS things that you normally wouldn't be able to see. And it also can pivot out to Datadog as well. So there's some very, very smart things in that tech. So what I wanted to do was create some smaller videos that were more 5-minute-y and bite-sized. I know there'll be 10 minutes. When I say 5, I know there'll be 10 minutes. But smaller videos that just highlight some of these very cool technologies that I've been able to work with and how they might be useful in incorporating into your own sort of workflow.
Excellent. Sounds good. And you can all find Aubrey pretty easily on YouTube. You just search for Aubrey Stearn. You'll find it.
Yeah, there's a bunch of videos of me talking on stage, I think.
Good stuff. Good stuff. Cool. Tell us about outsourcing. So this is a question that I have actually about the compliance requirements around having an organization potentially not just externally to your company, but externally to the region you're in, the legal region. What are the requirements around that? What are the regulations?
So there are different scales of regulation for outsourcing, but we can talk about like cloud outsourcing as an example. The EBA has revised guidance on this, and it started off quite big, and there was a lot of like requests for comments, and the sort of consultation period that went on for a very long time, and it was there was quite a lot to it, and then it really slimmed down quite a lot, and it became like quite consumable. And I think there was a realization that this is where things are going, and that the likelihood of AWS dropping out the market is just not, it's not something that's going to occur. It's not a scenario that we need to model for. And also like the model itself. So like whereas most organizations will have like their own data centers, you have your availability zones, and inside each of those they have their own data centers, and so they are highly resilient and highly durable. And again, there was that scenario. I think a few years back where S3 died, and then the whole internet died. Like it's one of those like we don't really simulate or model for that scenario sort of thing. It's quite interesting. But if you look at that guidance, and I hear a lot of people running around organizations saying like you need to be multi-cloud and you need to have 2 cloud providers, and when you look at that as a technologist, well, if I have to have two cloud providers, then I'm going to have an abstraction layer. So I'm always going to have to look for the service A and service B. I'm going to have to create this abstraction layer that provides a commonality, and I'll always be limited by the commonality of the components that share those features, right? That's always like, they have to both implement it, otherwise I can't use it. And that's quite an interesting notion. It's also like a fool's errand, because you're just going to waste a bunch of time writing this custom code that no one else is going to use. It's going to be brittle and fragile and require as much work as AWS or Azure or Google spend writing their own SDKs on your own SDK, which is nuts. And really, we know that the value proposition is to be all in, and that's how you're going to get the most value out of those services. It's where you're going to get the most acceleration from, not using DNS lookups and using alias records on CloudFront to jump directly to something and avoid all that extra traffic. Like, that deep integration is where we're going to see our value. And so what they said in this guidance was that that essentially you have to have a playbook. So if you were going to leave a supplier, then you have to have a documented explanation as to how you would go and move these services from one provider to another. You need to have people assigned to the critical roles in that process, and that you need to act out and play back this document and dry run it, essentially. Not saying we have to go and write it, but you have to understand, chunk it out and make it a viable document. And that also there's a line that in most enterprise agreements, this line is there, but it basically says that the incumbent provider won't hinder you in moving to the new provider. And it's quite a specific line from the EBA on that, but that needs to be probably in your enterprise agreements. But other than that, you're pretty much fine to go and use like one cloud and go all in on the services. You just need to know how you would go and move to another. But where it really gets funny is concentrated risk. Like, that's the big problem. So if you have elements of concentrated risk where a supplier might disappear from the market, or there's possibility of something, that's a big deal for them, right? And that's where all the panic comes from.
How about outsourcing talent? So if you want to have a team of developers somewhere near shore or something like that, what are the requirements around that?
I think it's viable. It really depends on the organization and like where data's kept and how people are accessing data. Are they accessing it over the internet, or are they VPNing in which case they're in your network and they're accessing that data, what the shape of that looks like. And it's also down to the organization. So I've seen organizations that are more comfortable than other organizations. I think there's things to think about. So if you have folks that are, for example, in data science, where you're dealing with like customer data that is or isn't anonymized, that's something that might be more interesting, right? And something that requires more scrutiny. It might be less viable to have folks in Europe, or for example, Belarus is a common sort of outsourcing. That's where it would get a little bit hairy. But there are other functions where you're not really subject to customer data, and you're working on smaller technology systems that are more discrete and not near customer data, in which case again, it's at the discretion of the organization. So I don't think there's anything really that says that you can't geographically outsource this stuff, but it's really where the organization is comfortable doing this. And again, it's a risk profile at the end of the day. So you will always be looking to reduce your vectors of attack or risk. Yeah.
So I think that's like some of the other things that they're just almost common sense that you would want to be on top of as a fintech organization, or any organization really. But it sounds like it's more about who has access to what data and where that data is, and the security of that data.
Yeah, absolutely. I mean, you're going to need a data access policy and classification policy, and to be able to say, or even think about things like you have customer data and it's stored in Dynamo. Well, you can always go into the console in Dynamo and look at that data. So like, who has to have access to go and look at the console and see that data? And then, if you have done that, then are you encrypting it? Because even if it's encrypted, you can still see this data. So you could still run, for example, KMS and go and encrypt each individual field in KMS, and then have only the services responsible for consuming that data be able to decrypt it. And so that's another way of just combating it. But you'll always have to go and classify that data and say, this is the data classification, and these are the folks that have access to that data, and that those need to be constructed regardless.
Mm-hmm. Yeah, makes sense. Cool. Well, we have reached pretty much the 50-minute mark. We don't have any questions from the audience. And if anybody does have anything they'd like to ask Aubrey, do please add it there, either in that ask a question section or on the chat on the right hand side. But let's have a chat about how things will change potentially once we're properly out of the EU and we lose all those requirements and those regulations. Do you want to tell us a little bit about what's coming up there, Aubrey?
Yeah, I mean, this is an interesting occurrence, right? And I guess like the EU is looking for it's common, right? The main word here is common and compatible. So everybody's operating under the same rules and the same guidance, and they're looking to make it both fair and competitive. And folks may have heard about the big hoo-ha over state aid, and maybe not exactly realize what that means. And state aids, for example, if you were to take your best competitor in a particular space in a country and then give them a shit ton of government money, like that would be giving them an unfair competitive advantage. And so there are actually rules on how much money you can give to people under the state aid directives built into our law. And so obviously one of the things that we're arguing about when we're leaving is like how much we can actually go and help people. So if you have somebody in the steel industry that needs, bailing out or help, like under state aid rules, like can we do that, and how much can we go and help them, and does that give them an unfair advantage compared to Germany's biggest competitor or France's biggest competitor? And that applies to financial markets and services too. And there was there is an interestingly a group set up in the European Union to look at I think it's the regulations, like how much regulations impede startups and fintech startups, and how much is in the way. And obviously, like there's a lot of cool technologies, blockchain, distributed ledger, AI, all this really cool stuff that we want to go and use. And like they're working on, are there rules around it, and what do those rules look like, and are they different tiers? And so what they did mention is that there is disparity between what is applied to startups and what is applied to those bigger firms. There's fragmentation in things like know your customer, KYC. So lots of differences there that I wouldn't say make it anti-competitive, but provide unfair competitive advantage. And again, like we know there are different scales of what you need to go and do. And so as a smaller startup, you may not need all control functions that a bigger organization needs. But that group was also talking about the ability to implement AI. And AI is a really interesting one. So things like computational neural networks are something that I think would potentially can really help with like consumer credit decisioning. But what's difficult about them is the ability to explain. So there is a big movement in ML and AI, and it's called XAI and XML, which is the explainability or interpretability of AI and XML to meet supervisory expectations. And the difference is that interpretability, I will struggle to say that, is the ability to look at something and predict or understand how it will work. Whereas explainability is the ability to look at the actual weights and values involved in that model and understand how it got to a decision. So like a really good example of this might be that, if you were to take an MRI and you were to go and run that through a convolutional neural network, what you would be looking for is like if that MRI had cancer on it, like how did this model get to that cancer diagnosis? And actually that's quite hard at the moment to go and do that. So there are a lot of different techniques for this, and none of them are really shored up, but there's something called layer-wise relevance propagation, which is works very well on convolutional neural networks. And what it does is create a back pass through that neural network and back pass. And you can run that through another tool and then go and figure out roughly how it has, through the different generations, made those connections to each neuron and figured out that something is, and this is ultimately like, this is what I think is cancer. And so the same thing applies in finance. So when we would want to go and apply somebody's or run someone's credit record through a neural network to go and figure out, hey, can we go and lend to those? We can't currently do that because both in the US and the EU, obviously with the EU we have GDPR, and in GDPR in the Act is something that says that when an automated decision-making process is involved with our data, that we have a right to understand like the outcome of that and how that decision-making process worked. And so what we're really challenged to do right now is to explain how the AI made that decision. And so that's the preventative thing in actually being able to use that. And so, sometimes we can and sometimes we can't, but the drive really is that, if you can't explain how a decision was made, and also like there's, our ability to understand that, and then there is at a consumer level, their ability to understand why that model made that choice. I don't know what the word for that is. Like I kind of wish it was interpretability, but I wish there was a specific word that would be for the end user that said like, this is what they are seeking. Sorry, I've really segued here, but there was so that group has come up with a bunch of interesting things about technologies that essentially say that it's not totally fair, it's not regulated in the right way, and their suggestion was another framework to regulate these technologies. There's always the answer, just create a new framework that's a bit more balanced and fair. I think essentially it was like, if a risk exists, then the rules should be the same. But obviously, as we know from many of these other frameworks, there are also scales to these and different proportionalities, and so different firms are afflicted by different rules. And so I don't think they can really get to the point where they can identify a risk and say that everybody has the same rule applied to them. I think, like most things, there'll be scales to this.
Yeah. Well, I think we are pretty much at the end. Let's wrap it up there. Thank you so much, Robbie. That's been really enlightening. I am going to share your contact details into the chat there so people can connect with you. Do you have anything to add just before we wrap up?
No, I really appreciate being invited to talk. I'll try and produce like more content soon. I'm definitely not the fastest at it, but I'm hoping that the quality is high. So if anybody has any suggestions as to things that they would like to hear about, like throw the suggestion out and let me know, and I'll try and create a video on it.
Brilliant. We'll be looking out for those.
Awesome. Thanks, Andy.
Okay. Thanks, everyone. We will see you next time. See you later.